All right, welcome back to Bullish, everyone. I am Sam Hardy. As always, we got Nick Stenger, we got producer Owen in the back. We are Stenger Family Office, and for the past 42 years, it's been our mission to deliver both clarity and confidence to help secure your financial future. Episode 13 of Bullish. We're looking forward to it. We're glad to be back. First episode of 2024. It's actually Valentine's Day when we're shooting. So, shout out to the wives. We had the Super Bowl last weekend, but then we've had a little churn in the markets here, a little volatility returning with some of the CPI reports and
Market
Fed decision,
Minute.
things like that. So, yeah, be sure to check out the Market Minute. You posted it, earlier in the week. So that's a really good look. And I know we might talk about some of that too. And we're going to try and have some future guests, some industry leading guests on, starting in the spring.
Jeremy Schwartz in April.
Yep.
Next 2 months from now.
Yeah. So super excited for
Dave
that.
McGarrell from First Trust, Chief Investment Officer at First Trust Portfolios.
Going to try and get Bruce Bond, who I know you kind of had talking about the entrepreneurial story, but didn't necessarily go into the markets as much. So
yeah,
try and, hit him up with that. And yeah, just remember, folks, anything we talk about, not individual stock advice, past performance, not a guarantee of future results. Stenger Family Office and its clients may hold positions. For a full disclosure, visit StengerFamilyOffice.com. Okay, let's get into it here, Nicholas. Super Bowl. Did you watch the game?
I sure did.
What'd you think?
Boring first half. I could have lived without Usher, to be honest.
Who'd you want to win?
Chiefs. I called it.
Okay.
I predicted it.
Yeah, I know.
Did you
winners,
watch it? Second half
win.
was better.
Yeah, second half was good. I wanted the Niners to win just because it's nice to have things mixed up. But it's they are a little bit of the people who say, "Oh, everything's scripted." I don't know if I believe in that. I believe there are parts.
You believe Taylor is in love with Travis?
No, I don't believe that. I think that there's some stuff going on behind the scenes there. But I'm talking about, oh, well, they're going to be down this much at half and come back and the whole entire thing. Do I think maybe there are favorites played, things like that? Yeah, absolutely. But no, I don't think that the whole entire thing is scripted on the field. Off the field, there's a little funny business going on.
What do we think Taylor and Travis are doing for Valentine's Day?
Does she have a concert? Probably that.
Oh, good point. Good point. Maybe.
Hopefully not making, any more like the after party cringy videos where everybody was trying to get up in their face, like I'm good.
We did promise we were going to stay a little bit more on script this episode, but just one quick comment or thought. Do you think they panned to Travis during a concert as much as they panned to Taylor during a Chiefs game?
I mean, I think you see stuff on social media of people taking like videos of him when he might be at a concert, but I don't think maybe they show him once, especially now with the Super Bowl. They might pan to him, oh, recent Super Bowl champion, whatever.
Right.
But they didn't give her that much screen time. They showed her a decent amount, but not too much. So, we'll see. I mean, this year was good, 115 million viewers, not an all-time high, but an increase from last year. And, that's a good thing for the people who spending $7 million on 30 seconds for ad time, because that's what it's running these days.
The Chinese money.
Is it just, well, I mean,
Timu's making $7 Patagonias knockoffs.
Yeah.
So
I had not even heard of them. I didn't realize this was a thing. I was completely taken, caught off guard.
I'm pretty sure you can buy a house on Temu for $3.
$3.
Don't quote me on that.
That's cheaper than Amazon. You can buy a $19,000 house.
Is that correct?
Yeah.
So it's a manufactured house?
Shipping container.
Oh, okay.
Walls go out.
Okay.
And then roof kind of folds down on top. 19 G's.
Well, if the inflation keeps going the way it is, we all may be in one of those sooner rather than later. So
they look kind of nice.
Yeah.
I think the one, commercials were fine this year. I personally like the Dunkin' Donuts one. Damon, Tom Brady, and Ben Affleck, where they were trying to get on J-Lo's song because they're a thing now, I guess.
Okay.
And that was, I mean, and that's, winners win. You got the GOAT.
You got all the winners.
Love him or hate him. I mean, you can't deny the guy's a great football player.
Sometimes people just hate Others because they're the best. They just
Yeah.
don't like it. Like the Yankees,
I think that's the thing with Tom Brady.
like the Pats.
Yeah.
I'm not saying I love them. I'm just saying other people hate them. I don't hate them. I think I look up to. I think they're interesting.
Yeah.
I
They're kind of
think I'm fascinated by the winners. And that's what I wrote
Yeah.
about episode 140, winners win. It's just fascinating. You know, like even
Yeah.
Elon Musk, obviously kind of polarizing. People love him, they hate him, whatever. But he's unbelievable to watch what he's doing.
Yeah. You can't deny. I mean, think about all the Starlink, SpaceX, Tesla,
Neuralink,
yeah, the Boring Company,
the
some
Boring
fun things
Company.
coming out of there. They've got the tunnel under Vegas, everything. So, yeah, I mean, you can't deny that the guy is great.
And I'm really impressed with the fact that I do have documents in front of me this episode. So that's
Yeah,
great.
you're welcome for those.
All right,
Let's
should we jump into Ozempic?
yes.
Okay.
This is an interesting one. Obviously, Novo Nordisk, the parent company that makes it, and obviously Lilly has some of these other companies have drugs that are similar. And I know that there was a lawsuit against them, and it kind of talked about, oh, well, there's stomach paralysis. There's some issues potentially with pancreas or gallbladder, things that kind of come, but a little bit smaller percentage of issues there, but it's a small subset of people who are still taking it. We what you wanted to talk, let's talk the muscle loss piece of it.
Okay, this is really important. So obviously we all knew that at some point there would be some issue with Ozempic, right?
Yeah.
There's no free lunch. If you
Nope.
really want to lose weight and build muscle, so sustainable weight loss, guess what? Sorry to say, you have to eat less and work out more.
Yeah.
Go to Sweetgreen. Shout out Sweetgreen.
We're still looking for a sponsorship.
But the reality is taking a magic pill, what it does, taking Ozempic.
But it's not a pill.
Please don't sue us, Ozempic. But, and I do like your commercial. I just want to tell you, I love your commercial. Or no, I'm thinking of Jardiance. You ever listen to that commercial?
Yeah.
Oh, tremendous. 10 out of 10. I
Great
listened to that
marketing.
on the way home in the
I
car.
please tell me you don't.
Pull it up, Owen. All right. So Ozempic actually makes you lose weight, obviously. But
Yep.
what happens is you also lose muscle, which is not supposed to happen when you're on your weight loss journey. You're supposed to work out. You're supposed to gain muscle. Muscle weighs more than fat. Then you lose the fat, and then the muscle's there. When you take Ozempic, they're finding that people lose muscle. And then once they're off Ozempic, immediately gain all the fat back, all the weight that they lost. They gain it back. The muscle never comes back. It's a big problem.
Well, and remember too, it's not a pill yet.
Oh, it's an injection, right?
It's an injection.
Right.
So you have to inject yourself with it. It was originally for diabetes. But to your point, yeah, you have to take it. The minute you stop taking it, it all comes back. So if you get on it, you have to take it for the rest of your life. And then what they're finding is with older people, right? And as people age and get a little bit more frail, having some more muscle mass is a good thing. Well, if you're taking this, you're kind of, as soon as you get off of it, you're more frail, and it happens in months, not years. And so that's an issue. I mean, it's definitely something that's concerning. And the big thing is, well, are you just doing it for the obesity, or does it help with the comorbidities that come along with obesity?
Well, 2/3 of the country is diabetic or pre-diabetic.
Yeah.
2/3 of the country. And I'm not the emblem of health, obviously. I'm working on it. I'm working on it,
Yep.
right? Trying to stay in shape and all that stuff. And it's hard. It's very tough to do. But one of the biggest culprits in our diets are sugar. I was just talking to somebody about this the other day. The American sandwich is a silent killer. I know it sounds kind of goofy, but
Because of the bread?
there's a guy who went through and he made a traditional lunch, like a sandwich and chips. Okay.
Yeah.
And like a glass of whatever, lemonade or something, like a typical, something somebody would eat on a regular basis. Right. And he does all the sugar between the bread, your processed meat, the cheese, the lemonade, the chips. Everything has sugar in it. Stuff that you
Yep.
wouldn't even realize has added sugar. And then he takes all the equivalent of the sugar, puts it on a scale. I mean, it's like that much sugar in your sandwich.
Yeah.
So no wonder 2/3 of the country has a diabetes problem or pre-diabetes. And it's actually interesting. You go back to, I think it was the 50s or the 60s. The sugar industry literally created a campaign to point the blame at fat.
Yeah.
And to say, oh, everything should be low fat. Instead, what they did is so what they did, instead of pointing the blame at sugar, which is really the problem, they pointed it at fat. Fat's not that bad for you. If you have healthy fats, right, unsaturated, it's natural.
Avocado.
You eat an avocado, olive oil, whatever it might be. Butter,
Yep.
even. Butter's not bad for you if it's created the right way.
Yep.
People think that's terrible for you. It's really the sugar. So a lot of people have a sugar problem.
Yeah. Well, and I think the one thing that I got out of, I think it was maybe New York Times, the article I was reading that was talking through this. One, you take Ozempic and you're losing the weight, and now there are all these companies. I've got Abbott's on here creating protein shakes to help with the muscle loss. You got another company doing a meal delivery service. You have other people trying to connect you with dietitians. Noom, which is like a behavioral health coaching thing, they're coming out with a muscle defense program. You have gyms coming out with muscle guard programs. So it's like, okay, I'm gonna take Ozempic to maybe kickstart it. Just go to the gym.
Right.
You're paying for Ozempic, and then you're doing as much work to make sure that you don't lose the muscle mass.
Right.
So the time that you're spending doing that, I'm sure if you actually just worked on your diet a little bit and then went to the gym or, whatever, you're probably even, and then you're not having to spend all the money on Ozempic
Well,
and
the investment problem behind this is, and I've always believed this, that the Novo Nordisk, and this is not investment advice.
Yep.
But I don't think the stock run's sustainable personally. I think at some point, and it's not going to be this massive wave of lawsuits, most likely, could be. I doubt it. It's just going to be the fact that it loses its efficacy. That's what it always comes down to, and you've seen this. You saw this with Biogen.
Yeah.
I mean, they'd come out with like a drug that would work for a while and it ran way up. A lot of times what happens is they lose their patent and it immediately crashes, So pharmaceutical stocks have not been the best investments, especially the legacy companies. Pfizer obviously had their big run with COVID. Now they're completely falling apart. I don't know if Pfizer will cover, right? It could take a long time. Bristol Myers. I think Bristol Myers is a better company than Pfizer, but I still think it's got a long road ahead of it. So same thing with Novo. I think at some point, it's going to be tough. So I've always issued caution on pharma companies in general. If you're going to own them, you probably want a couple of them in the portfolio if you're going to have them at all. And I prefer the companies that are more established. They're paying big dividends, right? They've got some legacy products that are producing cash flow. So it's an interesting issue. And even Pfizer, they tried to get into this weight loss game and they couldn't do it. They said, I think
did the FDA shut them down, or it was just too much in R&D?
I think they decided, let's not pursue this anymore.
Yeah, well, there's definitely going to be some headline risk. It seems like going forward, and Novo, I think they passed like 500 billion in market cap at the beginning of the month, and so they may run into trouble if some bad publicity kind of starts coming out and people start trading on the news. Let's do layoffs in 2024. Obviously, there's been a lot, and I have a chart we'll cover kind of in the second half, but I mean, you had kind of talked about this beginning of last year. We saw some issues with tech doing layoffs and things like that. We have continued to see some big layoffs now going into this year. Notable ones, 20,000 from Citi. We had 12,000. I think it was mainly managers at UPS that got let go. 10,000 potentially from Cisco, I saw a report on. And then 3,500 from Deutsche Bank, 3,000 from Estee Lauder, WBA, Walgreens Boots Alliance did a number. And then you had places, not a large number of people, but a huge percentage of the workforce. Spotify 17%, Snap did 10%, Warner did 10%. You had some car manufacturers on the EV side do a bunch of layoffs. So, I mean, I know we've kind of heard people talk about margin expansion. We had inflation. Companies either chose shrinkflation or up the price of goods or both, and were able to kind of save margins, expand those last year by doing that. Seems like maybe some more are now turning to layoffs as a way to save on costs and potentially save margins in that regard.
Yeah, it's definitely the early signs. It's almost like the canary in the coal mine of eventually we're going to see a slowdown with services, right? Because a lot of this is goods companies laying off people, not all of it, some of it for sure. UPS is really a services company, right?
Yep.
It's an industrial technically, but it's really a services company. to lay 12,000 people off, we figured it's like middle management
Yeah.
for the most part,
I
right?
think it was like 10%, maybe 10 or 11% of their workforce,
Right.
overall workforce.
So CEOs at these companies, same thing with Citi, is 20,000. You're going to see this more, I think, with goods companies than service companies for the next couple months. And then later this year, I think you're going to see some pretty heavy layoffs with services companies. CEOs are looking around the corner and they're realizing their margins are not going to be what they were last year. Last year
Yeah.
was some phenomenal margin expansion for not just the Magnificent Seven, but the rest of the S&P. Everybody said it was just the Mag 7 rally last year. Wasn't really looking at the data. I
No.
can name 50 stocks that were up just as much as the Mag 7, and there's probably another couple hundred that were up even more, right?
Mm-hmm.
That's coming down. That's how the economy works. We go in cycles. And when you have 5.5% interest rates, especially when you're a small cap company, you're not borrowing at 5.5%, whatever the Fed short term overnight funds rate is.
Yeah.
I'm running into entrepreneurs borrowing at 9, 10, 11, 12% rates of interest. And that puts cold water on growth plans. There's no question about it. If you were thinking about doing that M&A deal, and now you're going to finance it at 12%, you're going to think twice, right?
Yeah.
If you're thinking about, oh, I'll hire another 10 or 12 people because I've got some additional revenues and lower expenses than I thought I was going to have, you're now paying all that extra money you used to have in interest cost. You're not hiring those 10 or 12 people. And there's a lag effect when the Fed raises rates. They raised rates a couple months ago, all of last year, 2022, obviously a big chunk of 2022. We're about 2 years into this where it's going to have a chilling effect. It's just a matter of time. And it's not going to be the largest companies. The largest companies are benefiting from high interest rates. Apple is making more money from net interest today than most companies make in revenue.
Yeah.
Apple's not a bank. They're not supposed to make $60 billion or whatever in net interest, but they are, right? A lot of other Mag 7 are in the exact same position. A lot of strong consumers are in the same position, right? Family office clients,
Mm-hmm.
ultra high net worth people are literally, like you said, getting a stimulus from 5.5% interest rates. And the small consumer, the small business is not. You're going to keep seeing layoffs. And we're not rooting for this. We're not, we think this is terrible, quite frankly. We think it's awful.
Yeah.
And it's the fault of management when they have to lay off people like this, because what they did, they overhired, they didn't prepare correctly, and it's on them. I mean, quite frankly, it really is. I understand why they're doing it. But again, you pull it up on Google today, Paramount's laying off 800 people. You've got Instacart laying off 250 people. It's not a lot in a vacuum, 800 here, 300 there. But when you compound that across the economy, I do think we're going to see unemployment tick up a little bit, but that's what the Fed's watching. I think the Fed's really walking a tightrope here, trying to decide, do we keep rates high and make sure we tamp down inflation? Got a pretty hot inflation report yesterday.
Yep. And let's just go into it, because that's the next thing.
Yep. Or do you lower rates to save the employment market? And I think they're on the brink. I think they really are getting more and more concerned that they could trigger a mass wave of even more layoffs.
Well, everybody, we saw a great rally November through January, and I think it was like 14 of 15 weeks ended in the green. So amazing performance from stocks. A lot of it was, we talk about this all the time. It's a forward pricing, mechanism. Basically, that's what the stock market is. So they're looking at this year and thinking, oh, the Fed, their last hike was in July. Historically, you wait 8 months. That's when the first cut is. So March looks like a great one. It was like, what was it? 75% chance or 65% chance that a cut happens in March. Now we're kind of stepping into it. Powell shuts it down beginning of February.
And by the way,
not going to
for
happen.
March, we're down to 10% now.
Yeah, that's what I was going to say. I think it's way down. So we're not going to see it. They're trying to, again, kind of hold their, cards close to their chest. They don't want to necessarily share. They don't want to turn it into the 70s where we had 3 waves of inflation. You kind of got it a little bit under control. You loosened the grip a little bit, and then things just took off and it was out of control. You had 9% inflation again. They're trying to avoid that. So, I mean, we'll see what they say. They're trying to get it down to 2. Right. We went from, what was it, six something in 2022 down to like 3.5. So we knocked off 3% on annual inflation. That last, percent or two is really difficult to get, I think they're finding.
Yeah,
And
I mean
that's what I was reading through the journal yesterday they were talking about.
the issue is that it doesn't matter what they do with rates. The wealthiest, 10 call it 10%, 1%, however you want to segment it, they're still buying Ferraris.
Yeah.
There's still people out there going on $50,000 cruises.
Well, because they're getting 5% on their cash.
I would say and our clients don't represent obviously the middle zone of America, but our clients are certainly mass affluent, wealthy, ultra high net worth. I don't think a single one of our clients has been negatively affected by higher rates, other than we've had a few clients get laid off, and I know that, that obviously can happen independent of rates going up.
Mm-hmm.
I would say 95% of our clients have been insulated. And so all those people are still spending money. They haven't really slowed down a whole lot. I don't think they're going to slow down. 40% of homeowners don't have a mortgage.
Yeah.
Think about that. 40% of homeowners don't even have a mortgage, the highest level since 2005.
Yeah. There's
right?
a lot of cash buyers.
A lot of cash buyers.
Or people who just have paid it off at this point.
Our friends just bought a house in Wheaton, and small town down the road from Naperville, where we're at here.
Where I live.
Where you live. And they said there were 30 cars at the open house.
Yep.
You guys had a similar experience.
Yeah, it was the same thing. Two houses right around the corner from each other. And I'm not kidding when it was like standing room only in both these places.
Wow.
I'm waiting for people, I'm holding the door, shuffling them in. Like I'm showing the place, like, hey, I'm working here, check it out. Well, tell us what you think. Stuff like that, but it was crazy. And I just wanted to go see kind of what was around.
What's the price point?
Like 350 to 450.
Yeah.
But I'm talking to guys. I had lunch with some guys yesterday. One works at a mortgage, house, and then the other guy's a realtor, and he's talking 300, 350,000, $400,000 houses selling for 50 over asking. They're getting 20 offers and bidding wars and all this kind of,
Wow.
those are insane
What's
numbers.
The mortgage guy saying? Is he saying demand's still pretty strong, or is he seeing a slowdown?
It's picked up a little bit, obviously from the refi days, though that was the bread and butter, in 2020, 2021. But definitely there's been a little bit of a slowdown.
I think if there's enough supply in the market, I don't think purchasing would have slowed down. Even if rates are like 7%, right?
Yeah.
So for most people buying a house right now, or 6.5, 7. Even with 6.5% rates, if there was supply, I don't think we'd see a slowdown. I think your friend with the mortgage company would be booming.
Yeah. Yeah. It's just people like, I've got a 2875. We don't need to talk about it again.
There's no inventory.
Yeah. Oh, it's crazy. So that's why you have people who can still afford a house and maybe they want to pay a little. They're going to put 20% down so they don't have to deal about with PMI, and it's all about that monthly. You're still going to see people moving in, and maybe they're buying less house than they could have bought a couple of years ago, but they can still buy homes.
Well, this is why I'm bullish on home improvement, because I think a lot of people now they used to go and they'd say, okay, if I'm going to buy a new house, I want the major projects done, right? Because I'm going to be financing it for 30 years, which, by the way, financial planning wise, if you find the right house and it was remodeled the right way, it is way better financially to buy a house that's been redone, pay a little extra for that privilege, and then finance it for 30 years. That is much better than going to a house and then dumping cash into it. And I know there's construction loans and all that, but my opinion, much better to finance it over a long period of time. So that's why I am very bullish on home improvement.
Yep.
Because people are going to be doing projects as far as the eye can see. They're painting. You see Sherwin-Williams stock is just taken off.
Yep.
They're going to Home Depot. There was a doom and gloom narrative last year that Home Depot had like a little off quarter. Have you seen that stock recently?
No.
I mean, and again, not investment advice here, but Home Depot the past year's up 12%. It's up 86% the past 5 years. You've got Lowe's, the past year up about 6%, with up 117% the past 5 years. So this slowdown in housing maybe has slowed people down on purchase, but I believe it's going to continue to accelerate people redoing things at their current places.
Yeah, I agree with that. My wife and I have talked about it as well. Maybe because we're a little tight in the house that we have now, but yeah, it doesn't make sense to necessarily make the switch. And what does it look like to do a little improvement? Obviously, make sure we're gonna get our money out. I'm not just gonna, light money on fire. So,
But
yeah,
by the way,
well,
if you're a high school kid listening to this or a college kid and you're thinking about what should I do with my life? What should I do career wise? Give some very, very serious thought to the trades.
well, dude, think about all the people that we've talked about in the office, right? When they did the kind of build out up here, and we were talking to them, great guys, but maybe a little bit further along in their career, there's nobody to take their
They're about to
place.
retire and
Yeah,
there's nobody coming up.
yeah, and it's amazing how think about when you get a quote for something, how many people don't follow up with you. They don't reach out. So all you got to do is be 1% better than the next guy. Respond to emails, respond to texts, respond to phone calls.
Do the
Yeah, I'll
basics.
come check it out. That's all you have to do.
Right.
So yeah, I agree with that. Let's do some charts here. First one, this goes into is from Bob Elliott. It's the United States Challenger job cuts. So this is through end of January. We don't have February in here, but just kind of gives you a look back at the last couple of years to give a little bit of context around what it's kind of looked like. Last year, obviously, you're looking at big numbers, but that's when they had overhired and they were doing a bunch of layoffs. It definitely seems like there's smaller amounts that add up, but it's a much broader kind of cycle this time of companies that are laying off.
Yeah, this is a really good one. So walk people through the different peaks here. What are your thoughts on, obviously you had January of 2023. Why? Just because rates were starting to reach some peak levels, or is that just
Well, but
natural?
think about all the tech stocks that
Right.
did layoffs.
But why January? Is it just
Meta,
because
Google.
you're going through promotion season, or you're going through?
Honestly, I would have to look because you see January of 2022, it wasn't an issue. It probably had to do with people finally getting to the point where rates were higher and it looked like they were going to be higher for longer, and they realized, yeah, we probably need to make some changes so that we don't get ourselves into big trouble, down the road. Google, Meta, I think were the two biggest ones that we saw layoffs coming from, but
Which way overhired?
yes. It's the same story. Oh, there was a person making $160,000 as a recruiter and was told not to do their job for the first year.
Yeah.
Stuff like that. So,
Chief officer of Goat Yoga.
yeah,
That sounds like a good job,
I would love that,
but actually not really, because now you probably don't have a job.
unfortunately.
It's
So,
interesting how 0% rates allow people to do stuff like that,
mhm.
or allow companies to expand into, job categories that you never even thought would exist. And then as soon as rates go up a little bit, it
Run
all
into
ends.
issues.
That's
Yeah.
all over.
So I thought this was
What
just
do the
good to put
goats
some
do?
context.
When you end Goat Yoga, what do the goats do? Do you send them back to the farm?
No, they probably got like a little pen in there. They get to hang out, maybe a little volleyball action.
What is Goat Yoga? Does anybody know? Is it the
No.
goat stands on your back while you're doing yoga?
Oh, is that what that is?
Is that correct?
Yeah, they're like,
Owen, have you done that?
no, but I know people have done it.
Okay. Producer Owen knows people who have done it. How was the experience?
They give a solid 6.
6.5 out of 10.
Goat
So
yoga.
goat yoga going to 0.
Or is it you just, oh yeah, the goat stands on your back. That's unbelievable.
Yeah.
Pull it up for all the people at home.
For all the people at home.
So it looks like if the people are close enough together while they're doing yoga, the goat kind of travels from person to person.
Goat yoga near Naperville, Illinois. Some good SEO going on there.
Goat yoga near me.
Yeah.
Okay, here's goat yoga in New Hampshire. If you're listening to
dude,
this,
Why?
the people are basically, is that downward dog? What is that? What's that move?
Child's pose.
Child's pose. And okay, here's a gentleman laying down doing some yoga. Oh, here's
And now we're
birds.
looking at chickens. All right. I'm done with the goat yoga. Get this out of here.
I feel bad for the goats.
Yeah.
That's
I do.
sad.
I'm out. I'm out. I'd rather try like Pilates or something. Any other comments on this?
No.
Okay. We
Sorry.
will not be
Derailed us
doing
again.
we will
Derailed us
not
again.
be doing goat yoga at this. Well, you might. I don't know. I'm not. I'll pass.
I'm not a yoga guy myself.
No.
I'm not very flexible.
Okay, this is a great chart from Ryan Dietrich. Just shows average monthly returns from 1950 through 2023 to give kind of an idea. They've got since 1950, February is negative. So the past 20 years, you're also slightly negative on February. Past 10 years, it's been okay. And then in election years, you've actually seen it down. That's probably what, a quarter
Election years
percent,
are
half a
tough.
percent.
Election years it can be tough.
So usually the beginning of the year, you have a nice end of the year rally. If everything's going well with the markets, people spending for the holidays, you have a little bit of just a cooling down period the first couple of months, typically. That includes January and February. March, maybe a little bit of an uptick.
Well, I think too, you're digesting Q1 earnings.
Yeah.
And people are starting to freak out a little bit about the year. And they're like, okay, is this really sustainable? Is this going to keep going for the rest of the year? Certainly a lot of the small cap. I mean, did you see how bad small caps got hit yesterday?
They were down like 3.5%, 4%, right?
Yeah. I mean, this is why we have been very, very careful on small caps the past couple of years as interest rates have risen. You look at large caps year to date, just the S&P 500 up 5% without the dividend. Small caps are down 2%. Think about that amount of divergence. Look at mid caps here. Mid caps for the year to date 2024 up 1%. So mid caps have fared much better. But I don't know how you can make a reasonable argument in this kind of an environment that you'd go out and buy market cap weighted small caps. I know people have their reasons. Maybe you have a better mousetrap of we're going to filter out certain sectors and different companies. But if you just look at this small cap, the small cap index, and you look at the exposures, 18% industrials, obviously heavily affected by higher rates, 18% financials.
Yeah.
That's all about rates. It's 100% rates there. Discretionary, obviously not terrible. IT is not bad. Healthcare is not bad. Real estate affected by rates. So right off the bat, you've got a good, call it 43% of the portfolio that's going to be rate sensitive.
Yeah.
So I don't know how you overcome that.
Yeah, and he makes a good point too here. He talks about the last two times the S&P gained 20% plus on the year. The following February was weak. 22, we saw it down 3.1%. Obviously, 2022 was a tough year. And then in 2020, it was down 8.4% going into likely the news on COVID.
Right.
But still, something just I thought would be good to talk about.
By the way, did you see that stat? It's like you have twice the chance that the market's up 20% for the year than being negative. Any percentage amount.
Yeah, if you look at historical kind of calendar year returns.
That's fascinating.
Yeah.
I mean, you literally have a better chance the market's up 20%, not just up 20% than being down any amount.
Yeah.
If you told somebody, if you had cash, if somebody gave you $100,000 at the beginning of every year to invest or do something with, wouldn't you just throw it in the market?
You would think, but it doesn't necessarily fly for everyone. And I know we keep, a little bit in very liquid, safe stuff for living expenses, but yeah, long term, I mean, it's been proven. Stocks make you money, bulls make you money. Maybe we're not as smart as the bears, but bulls make you money.
Intelligence and wisdom are two very different things.
So, and I think this brings up a good point too. This is also from Ryan Dietrich, and it just is talking about the volatility is the toll that we pay to invest. So yeah, we had the market ripped November to January, and then we saw a little bit of a pullback yesterday. I think it's a little, flat or up a little bit today, but you're going to have a 3% dip 7 times in the year. 5%, you're going to have that 3 times, a 5% correction, 10%. This is for those who can't see it. You're going to have 10% correction a year. And then you're likely going to have a 15% correction every 2 years, a 20% bear market or correction every 3. And that's just historically. That's 28 to 23, 1928 to 2023.
Okay, which totally plays, right? Because 2022,
yep,
big time correction.
Yep.
Down 20%. So statistically, what this is saying, we didn't have one in 20. We had one in 22. We didn't have one in 23. there's a good chance statistically we don't have a 20% correction this year either. There's also a very good chance we have a 15% correction. And that's what we were talking
because we didn't have it last year.
Right. We were talking about this offline. We kind of would call it a garden variety correction. You have a 10 to 15% pullback. Most likely have a 10% pullback sometime this year. Maybe we're in the midst of that right now. We'll see where things end up. Today's up. Yesterday was down.
Yeah.
But I like this chart because, you know, that would put 2024 as the year that we're down 15%.
Yeah, we were down. Yeah, you said this. We were down 20 plus in 2022. And if you haven't, I can't remember if I mentioned it at the beginning, but you put out a market minute earlier in the week just talking about, you know, the stocks being down. I think it was 1.5% roughly yesterday. And so that's a good one to go listen to as well. I'm sure you kind of hit on some common themes there. Let's look at the next one. Do you have anything else you want to say on that?
No, let's jump down. Let's do number 5.
Okay. Number 5.
Let's talk Mag 7 performance.
Okay.
I think that's really interesting.
Yeah, so this is a good look, right? Everybody last year who's saying, oh, these tech stocks, it's a bubble. Everybody's, you know, everything needs to go down. You forget how much the Mag 7 was down. NVIDIA, 50%.
This was 2022.
2022, sorry. NVIDIA down 50. Meta down 64. Microsoft down 28. The S&P was down 18. Apple down 26. Amazon down 50. Google down 39. Tesla down 65. So, you know, I think people last year forgot about how badly some of those stocks were beaten. Then AI comes to the rescue to some extent. And some of them just rip. I mean,
Well,
NVIDIA's
actually, it was earnings that came to the rescue. That's really important because this has not been a multiple expansion. And that's so important for people to realize because there's going to be a lot of comparisons drawn to the late 90s and people saying that these companies, you know, the Mag 7 are just like the late 90s and that bubble.
Yep.
That's just not true. The late 90s was a multiple expansion story where earnings really were stagnating and companies were just being valued at 50, 100, 150 times earnings every year. That's not the case here. Actually,
no.
Earnings multiples on these companies have stayed somewhat the same the past couple of years, but their earnings growth has been off the charts. It's been unbelievable what these companies have done. They're sitting on, again, we talked about those cash piles. Where did the cash come from? From all the money they made.
Yep.
Okay. So, you know, you can't say that we're in this bubble. Obviously, these companies are a little bit richer than you might like to pay. 30 times earnings, 35 times earnings. Could you see some corrections there? Sure. But this is not the bubble and the doom and gloom cycle that we had in the 90s. It's just not there. I don't see it. This is a real bag of popcorn. Naper Nuts and Sweets. I want to plug these guys. Our old neighbor, believe it or not, used to own this place. Started it when probably about 25 years ago now.
They're delicious.
It's a staple downtown Naperville. Check it out. And for all of you out there that open up a starter account with any amount, you will receive a welcome kit from Stenger Family Office, and it will include a gourmet bag of popcorn. And one of the things I will tell you is this is no ordinary store-bought popcorn. This is handmade, delicious. If you come into town for Investor Day, you can pick up another bag. Excellent, excellent stuff. You've had
tell them what they say. It's gluten-free if that's, you know, an issue like most popcorn is.
Oh, listen to this.
And it's heaven in a bag.
Here's what's really interesting. Today is Valentine's Day. Valentine's Day 2003. Crunch time. Operation Caramel Corn is born.
Wow.
Isn't that unbelievable? Just think about that.
20 years ago.
Here we are, 21 years later, and we're eating the Sweet Life caramel and cheese mix Naper Nuts and Sweets. Check it out.
Pull it up.
Meme of the week.
Great stuff. Yeah, so this was a fun chart. Getting to where I need to be. Okay. This is our meme of the week. Why? For those who can't see it, we have Nancy Pelosi on the cover of Time magazine. The title, Inside Trader of the Year. Why, you might ask? Well, it's tied to the Mag 7. We're looking at NVIDIA. She happened to buy calls way back when. And let me look at the link here. This is another Unusual Whales. Obviously, some great content coming from him. But November 22nd, she bought NVIDIA calls. Since then, they are up 77%. They have made her $1.3 million, which just happens to be 6 times her annual salary in the matter of 2.5 months.
My major goal as an investor, as a financial advisor, is to one day become as good of an investor as Nancy Pelosi.
Well, and there's a whole long thing here that I'm not going to read, but it just goes into the fact that right after these were purchased, it just happened to be announced that the US was doing some wonderful things in chips and semiconductors and, what they were allowing to happen and pass these bills that were favorable for all of them. So obviously the two are completely unconnected.
Oh, absolutely. We would never insinuate that Nancy Pelosi had foreknowledge of the good news for NVIDIA. She's a very, very good investor.
Arguably the best.
The best.
So that wraps it up for charts.
Does she get the W of the week on that trade?
Well,
I think we should give it to her.
Sure, we'll give her the W of the week, and we're kind of have like Mag 7 theme for the end of the show here. So, yeah, W of the week, Inside Trader of the Year. We're jumping to Kramer, and I know we joke about Mr. Jim Kramer many
L of the week?
many times. This is L of the week.
L of the week.
We'll have the
explain what the L means.
Loser of the week.
Biggest loser.
And usually we try and look back in time, see calls that were made and how they fared. Now, I know there was like the inverse Kramer. Did you see they shut the ETF down?
I did.
I'm not entirely surprised that an ETF whose index trades the exact opposite of what a CNBC pundit talks about didn't garner like enough assets to justify keeping it open, but it was a good marketing thing.
Wasn't that great either.
Yeah, because obviously this guy, one, I commend this man. I mean, we leave here at what, 5, 6 o'clock. The guy has done how many hours of television during the day? 6 hours. Just not. Oh, we're gonna be looking at it, and he's just like chart here, this and that, and he has guests, and so we haven't had him on L of the week yet, even though he's made some bad calls. This one, fortunately, is actually a really good outcome for those that owned Meta, but.
No disrespect to Jim Cramer. We really mean that. The guy's trying to give you a stock pick every day of the week.
Yeah.
And about half of them, well, maybe 60% of them.
Some turn out to not be great. Right. And he's also been very bullish on the market, thinking that, and then the next day it went down 1.5%. That was a more recent one. But
he did say in 08 and 09, Bear Stearns was fine.
And like 2 days after, that's where it all came from.
Right. And then he also said Tesla was never going to get anywhere when it was like $12 a share. So
yeah, so he's
earned his spot as the L of the week.
Yes, and we haven't had him on yet, so I figured this was a good one. This is dated October 27th, 2022. Meta. Giants Q3 results, disappointed street estimates, sending the stock to its lowest levels since 2016.
Meta traded at $100 a share in October of 2022.
And it went down the next week, bottomed at 90 and something cents.
Yep.
And
that's when
since
they bought
then,
it for clients, by the way.
Yep. And since then, it's up what? I mean, it's trading at $450 right now.
300%. Yeah.
Yeah. So it was basically 2 years. Or a year and a half. Then they just came out with their recent earnings. That's why I thought it would be good to bring up now, because their earnings in Q4 were phenomenal. They announced that they were going to start paying the dividend, quarterly dividend, and the stock shot up 25% in a day.
Yep.
So, which I think was a record before ARM. Like a week later, but
well, also let's not gloss over the fact that they shot up 25% in a day off of being a multi hundred billions of dollars in market cap company.
Yeah.
So they went from a market cap of
470 the stock's trading at right now.
Yep. So they were at roughly they basically went up 200-300 billion in market cap in a day.
Which is insane.
That's wild stuff. They basically went up as much in a day, more in a day than most companies are worth in total market cap at all.
How much was it? Could you repeat it again?
About 200 billion.
200 billion in a day.
In a day.
Yeah, I mean that's wild.
For some context, I mean, Bank of America's worth $262 billion. Wells Fargo is worth $175 billion.
So in a day, they gained the market cap of some of the biggest banking financial names that we know.
ConocoPhillips is worth $129 billion. Facebook did basically double that in a single trading session.
Yeah, it's pretty incredible
But
to be that big and be up 20-25% a day.
I mean, I don't blame Kramer on that. There was a narrative. I'll never forget. I mean, there was a narrative at that point where it was being pushed out that Facebook was going to go out of business. I mean, that was the actual story. If you read the news, if you listen to the analysts and the pundits, all the companies were issuing sell ratings or at least underweight ratings.
Was this with the virtual reality
metaverse?
Yeah.
Yep, they were super bearish on the metaverse, and I was obviously pretty bearish on the metaverse, but we thought the stock just fundamentally was undervalued, so we bought it. Thank goodness. But I could see how you could make that mistake. And, you and I have talked about this offline as well, about how important it is that when you buy a company like a Facebook, like an Amazon, like a Microsoft, a Tesla, you've got to be willing to buy it again when times get tough. Go ahead and buy it when it's up. That's fine. Buy it when it's up. Buy it when it's at 450 a share, knowing that you're probably going to have an opportunity to buy it back when it's down 50%. And you've got to hold your nose and just do it. Obviously, it doesn't work out every single time, but you can't buy these highly volatile companies without doubling down when times get a little bit tougher. You can't, certainly shouldn't sell it because you ultimately regret it.
Yeah, and in the short term, we've obviously seen pain in certain companies like this. I think, Dan Ives, who has been on many things recently for his views on AI and what it means moving forward. We're seeing it with Tesla. Now, Tesla is kind of going through what Meta was going through about a year and a half ago, where people are trying to figure it out. And yeah, short term, maybe people lower their price targets who are, bullish. Tesla long run, but short term, he's like, yeah, there might be some pain. They're going to have to pivot. The management team's going to need to make decisions, and Meta did a great job at doing that. I know they kind of stopped pushing the metaverse to some extent, going back to their roots. Thread was an L, Threads, but
you don't have a Threads account?
No, because I didn't want to have to delete my Instagram if it didn't work out.
Okay, so here's Dan Ives on Twitter about Tesla. Obviously, big deal with Tesla right now, going on in the courts in Delaware, and Elon's been tweeting about this, about the pay plan, and I think he was supposed to net, was it something like $60 billion or $80 billion or something?
It was a lot.
So here's Dan Ives at Wedbush. He says, for investors, it's crystal clear just how far ahead Tesla is ahead of the rest of the auto industry when it comes to producing and scaling EVs, with last night another display of pure breadth and scale of Tesla globally. This is a showcase event for Musk and the Tesla community. Based on our analysis of Giga Austin, it appears paperwork is now clearing the way for Model Y production starting over the next 7 to 10 days. We believe the stamping machines for Model Y and testing is already in place and mostly completed, a green light for Tesla to kick off Austin. We believe there's $5 trillion of EV auto market dollars up for grabs, with Tesla likely to own $2.5 trillion of this pie. We estimate China is worth $400 per share to the Tesla story for 2022. This was back in 2021, he wrote this, and that he was raising his price target from 1,100 to 1,400, and the bull case being 1,800. So back in 2021, I should have said that at the beginning, Dan Ives and a lot of analysts were putting an $1,800 price target on Tesla. The last time that he's really tweeted about this was December of 2023, so a couple months ago. And he said that they're going to raise their price target on Tesla from 310 to 350, which is a massive drop from the 1,800 level that they
Did they have any splits though in that time?
Oh, that's a great point.
I think they may have had some, and he actually came out a couple weeks ago. I think 2 weeks ago, he was on Closing Bell maybe, and he had been on right before Tesla's earnings call, and basically said 350 price target still, but they need to have their wits about them when they talk about it. Go ahead.
Yeah. So no, great point. So I'm really happy you said that. So since 2021, when he first said that there would be an 1,800 target on Tesla, it split 3-1. So adjusted for splits, he basically had a 600 price target on Tesla back in 2021. So still about half of where he was a few years ago. But he reiterated it, right? 300, 350.
I think he dropped it back down to 315 because, you know, the CFO left August of 2023.
Right.
And their quarterly earnings call was garbage in Q3. Their quarterly earnings call in Q4 was also not great. And he was hoping it was going to be better and could still justify the 350. But I think Elon was running it. And while the guy's great, he's a visionary, those types of things are not, you know, always his strong suit from an investor's standpoint, especially some of these institutions. So I think, you know, he did lower it. He's still bullish long run, but the next 12 months, I think there's a little bit of a drop off in demand. They're not going to be able to, or they're not going to produce as many cars. But AI, he thinks that they're positioned to be somebody to really take advantage of that. They got the robots now. I think full self-driving is something you and I have talked about a lot, and they're coming out with the sub $30,000 like Y model, which I think doesn't even have steering components. Now, this is obviously future and dependent on the full self-driving regulations, things like that. But I mean, it's an interesting story.
No. So okay, let's explain this whole Tesla story really quickly. Okay, you're exactly correct, but let's actually like go through it a little bit more slowly for people because you don't want to miss this. Like, okay, I'm not telling you to go buy Tesla stock, but I will say as an opportunity out of the Mag 7, this is your best opportunity if things work out.
Yeah.
There's no question about it. This could be the next big run. I'm not telling you to go buy this thing. I'm not telling you this is investment advice, so please don't hear this wrong. But out of the Mag 7, this is definitely the one that's gotten hit the worst and could be a buying opportunity. Maybe not the second, but down the road. And that's what we're looking at for clients too. Tesla first was just a brand. It was selling the idea of EVs. The market's figured this out now. People don't really want EVs. They want Teslas. That's why GM is having trouble. That's why Ford's having trouble.
Yep.
Toyota hasn't even tried to make a fully electric car.
And have even gone all in on hybrids. And I think GM is pivoting to hybrids as well.
Yes. And hybrids make a ton of sense. I think hybrids make a lot more sense than electric, quite frankly. People want Teslas because they're cool, because they like Elon Musk. There's 25 different reasons. Wisely, Tesla processed a whole lot of cost cuts on their cars. They went from what was a X, like 100,000 to now 60, right? Yeah. Same thing with the Model Y, same thing with the other sedans. They've basically gotten the cost of buying a Tesla, like you said, to that $30,000, $40,000 price point, which makes it very, very competitive compared to the other options. I don't think they did that as a move out of desperation. Yes, obviously they've had some demand weakening, but I think more so what they did was they were taking advantage of the environment at the time, which was GM and Ford having strikes and Stellantis having strikes where they couldn't produce cars.
Yeah.
And they're basically now coming in and saying, we're going to sell you the hardware. And this is the Tesla story you have to understand. And I'm not saying this is 100% going to happen exactly this way, but what I will say is the investment story is we're going to sell you the hardware for basically next to nothing and try and turn it into a subscription business, a reoccurring revenue model. The reoccurring revenue model is that at some point, if fully self-driving cars are approved and regulated and allowed to exist, think taxis, think rental cars, think all the different use cases.
Yep, especially in big cities.
Elon will sell you a membership for what, a couple $1,000s a year to use your self-driving car, and you aren't even going to think about the price of the Tesla. All you're going to be thinking about is the price of the fully self-driving. And so if you believe that story, I agree with Dan Ives, the stock's undervalued.
Yeah, I mean, if the full self-driving thing becomes a reality, Tesla's the only one who's really, they have the entire infrastructure built up. And then not to mention, he has Starlink, which all of the cars will be tied to, that are constantly, so you don't need, you know, you have all the satellites built into it already. So,
which, how brilliant of a move is that, right?
Yeah.
To say, okay, they may shut us down eventually where we can't use their networks. Let's just create our own.
Yeah. And I mean, we've even seen though, this is the chart going over.
Oh, nice. Yeah.
Yeah. Price of a used Tesla. So I think we actually showed this maybe
Couple of
December.
Yeah.
Yeah. A couple episodes ago. And it was at that like $42,000 or $39,000 mark. Yeah. $39,000 mark. So it's actually continued to drop. So the average price of a used Tesla is now $34,000 from a peak of 68,000. So it's basically half. They've dropped 50%. And I mean, to be fair, as a business strategy to price out competitors, I mean, we talked about this. I think Ford was losing $60,000 on every EV produced. They're not making the Lightning anymore. I think that's correct, right? And so they tried to price out the competition, and then the people who are still around are adapting to Tesla's chargers so they can utilize the network.
They're not completely stopping the Lightning production, but they're slashing it.
Okay. Yeah, because dealers weren't wanting them. Dealers didn't want to order EVs. They wanted hybrids or internal combustion engine. They didn't want full EVs. So, I mean, you can be a hater of EVs or of Teslas, but they certainly have the Model Y was the best-selling car. I think you said that. It was the best-selling car last year. Not just EVs. Every single car sold. It was the most popular model. 1.25 million models, I think, or units, something along those lines. So, really, yeah, an interesting thing. And we'll zero to the moon. I didn't have the Apple symbol in there. That was my bad. We'll talk about that though. Staying on
We're
Mac.
talking Vision Pro, right, on Apple?
Yeah. Well,
So Owen, I know you don't have a mic back there, but you just recently used the Vision Pro. And what are your thoughts?
I thought it was so cool.
He thought it was really cool. What else? What do you do with it? What is it?
It's just full immersion. It's
Describe it. It's goggles.
yes, like goggles you put on.
Okay.
Everything is controlled with your eyes.
Everything's controlled with your eyes.
Like like your phone.
yeah, it tracks your eyes. Yeah.
It tracks your eye movement. So if you're like this, like if you look around, it moves the really. Wow.
And, you do everything with your fingers, so it tracks your eyes, and then you like tap your fingers together like this.
Okay. So pull up the video of Zuck here, and then pull up the Vision Pro so everybody can see it, just in case you haven't seen this Vision Pro goggle system. I guess they would hate hearing me call it that.
A
But
goggle system. I don't think that's what they would call it, but this was actually they say it's a little bit more opaque than this. And I know
Okay.
Owen sent us, so it's, you can kind of see like this,
right.
where it's like it's almost kind of purple for those who are looking. And then let's pull up Zuck here. So this is Zuckerberg's thing. He took a video on his couch, and I'll let him explain it some, but they have the Quest 3. So I'll play the video, then we can talk about it afterwards.
Are we gonna get
Before I
audio
get
back
ahead of
there?
myself.
I don't think we have audio.
And, I have to say that before this, I expected that Quest would be the better value for most people since it's really good.
I don't know if they can hear that.
Yeah, I
on
don't think
the
that.
podcast.
So basically, he took this video on his couch, and sitting across from him, somebody wearing a Quest 3. And now the Quest 3 does not have the open glass piece. I think the tracking is a little bit different, but it's $500, and the video is still really good. And it's called their pass-through, mixed reality pass-through. So this guy who's talking to him, they show it from his view. He's got, his internet over here. He's got like a show up over on the other side. And then in the middle is Mark. Which maybe they're not going to be as productive if they start wearing them around the office and they're not actually listening to each other. But his big point is he was thinking, yeah, Quest is going to be the value play to the Apple Vision Pro. And the reasoning there is the Quest 3 costs $500 for the basic version, and the Vision Pro is $3,500, so 7 times. Now, he's saying, hey, I kind of use both. I got to try it out. Quest 3 is actually just as good. In fact, I like it a little bit better. Now, there's some great marketing. This is a great marketing move by him. But you have to remember, too, and this is, I don't know, my thought on it, Nick. I'll let you get a word in. But this is their third iteration of it. The first one was not great, you know, and so Apple's kind of starting. They've priced themselves really high in the market. They've got the silly battery pack with the cord that falls down. We've all seen the memes of people walking around and, you know, they're doing like this, crossing the street and stuff like that. But that's, I don't know, that's my thought on it. There's definitely some development moving forward for them.
I think okay, so like if you go on the Facebook's website or Meta's website, it breaks it down into 4 different categories. So you've got entertainment. Basically, you can watch a show at home. It looks like you're at a movie theater. That's kind of cool, actually. I'm not a video game guy myself, but a lot of people are going to use this for video games. And then productivity, that's the one from a work standpoint. And as an investor, what you probably want to be paying attention to, because that's where the scale is going to be. They're not going to really make money from these things, selling one to you or selling one to Owen or me. You know, it's you know, a couple $100 here or there. But the real money is if this really makes a difference with collaboration, also training. I know they've talked about doctors using these to practice different surgeries, which is pretty cool. I mean, if you're doing remote work, basically they can set it up as it almost feels like you're in the room with the other people, which is that's pretty cool.
Yeah.
I know it's kind of corny at first with the whole avatar setup and all that. So they're going to work through the kinks there. I mean, even think about the first iPhone. You know, how long did it take to get to, took about 15 years, I guess, to get to the iPhone 15. So it's going to take the same amount of time, I'm sure, for these things to really get fleshed out and maybe faster, but to get to the point where there's some real use cases. But if they can actually turn this into a subscription model, that's where all the money is. Every single one of these companies and any smart company out there is really not interested in one-time product sales. What are they always looking for? Reoccurring
subscriptions.
revenue.
Yep.
You know, just like you used to buy the iPhone and it would work for 5 years. It's like every 2 years now the thing slows down and you got to get a new one.
I've had one for 4 years. I mean,
that's pretty good. That's pretty good.
I don't know how.
So maybe 4 years, but then they make you get the storage, right? Because you don't want to lose your photos. So that's Apple services.
Yep.
So the question is going to be, how do they really turn this into a long-term reoccurring revenue model? I don't think this is the game changer that everybody thinks, at least right this second. But eventually down the road, it could be pretty interesting. And I'm looking at Meta's website here. They're saying MetaQuest Plus is their gaming subscription. It costs $8 a month or $60 annually. So there's your recurring
They have subscriptions
revenue
on that. Do you think they could ever have a time where at the bottom there's always like ads that run across, and so you could pay extra to have, you know, it's kind of like Amazon. They just Prime, everything that you watched was no ads, and then all of a sudden there was you know, would you like to upgrade your subscription $2.99 for ad-free experiences, stuff like that. So
there's some money in that. I mean, I think the real story is you saw that Microsoft acquisition of Activision Blizzard. You remember that whole thing? So they paid $68.7 billion to buy those guys. And Activision Blizzard it's all the games. I know a little bit about
it's Call of Duty is their biggest.
Call of Duty is their biggest one. I really think, and they almost didn't get to do this deal. It almost got down to the point where they were going to get blocked by the DOJ.
Yeah, for antitrust stuff.
For antitrust. But the reason they made this move, I think, is because they were worried that an Apple or a Meta could have came in and bought them, and then nobody has access to those games.
Yeah.
Unless you go through Apple or Meta.
Do you think is Microsoft going to come out with something? Because remember they had
that's what I think is coming. Yeah.
Yeah. Okay.
I would imagine that you wouldn't buy a game maker like that unless you had some sort of plan to vertically integrate everything.
Yeah. So I think that, yeah,
and then maybe
that's
what
definitely
you do,
something.
you charge how much is a game? $65, $70 nowadays?
Yeah, right around there.
So maybe you charge a subscription to the game and then it's an upcharge.
Well, they already do that.
Oh,
there are certain games where you just buy like a subscription. So rather than paying the, you know, $70 to own it, you can have access to this many games for X amount a month.
Right. And then now you could upgrade to have the fully immersive experience or something.
Yeah. Do you think that there's, from a video game experience, it's like Ready Player One almost in a way? Like I don't know if you've seen that movie. It's this idea. well, it came out like, let's say 4 years ago, and I think it might have been a remake. I don't know if I'm off on that one. Anyways,
Wait,
is
wait a
there
sec.
a?
This is a really interesting point you're saying. Pull up, ready,
It looks
player
just
one.
like this, right?
That is really crazy.
Yeah.
That is
So
wild.
yeah, it looks very very similar. And these people basically, it's in this dystopian society. You
Right.
live in these tall like shipping containers all put together, and that's where they have some of this stuff. And it's like a competition to win something. I watched it when it first came out. It was a pretty good movie. But it looks very very close to that. Obviously,
This
gaming
is so
perspective, there's value.
let me just read you the plot from Wikipedia. It says the film is set in 2045, where much of humanity uses the oasis of VR simulation to escape the real world. That is wild.
Yeah, and it's all this game where, spoiler alert, there's like a hidden, like an Easter egg thing where if you win it, you get the guy who created the Oasis's fortune. That's like, I think that's
Wow.
what it is. I may be a little off on some details there, but I'm pretty sure I mean, it's a fine movie from a gaming perspective. Yes, there's huge value, continues to be. From a work standpoint, I've heard people talk about the fact too, like you don't have a laptop anymore, you don't have a desktop, you don't have monitors. You literally throw the thing on and sit at a desk, and you have your monitors set up however you want, and then keyboard basically that shoots. This is like versions in the future, but I've heard that talked about
Really?
as well.
So you don't necessarily have a computer like we do, like a laptop. You put on these glasses and then it's just this it's
Yep.
immersive.
Yeah.
Wow. Did you Owen when you did it, did you feel like it could get there at some point?
It was full. It was like full immersion.
Wow.
It was so. You
So-
gotta look up some videos. It's hard to describe it, but like I was, like there was a part where I was like in the water with like sharks and stuff.
Yeah, so
That's crazy.
that's pretty cool. I mean, so that is really interesting. If they get to the level of you know, advancement with it where it has processing speeds where you could do I guess everything's moving in the cloud
And
anyways.
it's gotta have the battery capacity to be able to
Oh,
do that.
right. That's the biggest constraint.
Or people are just gonna have it, and the battery life. But I mean, that's where, oh yeah, you have one for 2 years and the battery starts giving you a hard time. You can only have 5 hours throughout the day. So you either need to upgrade it or, replace something in there.
So
So
it's almost the arms race for these two companies, for Apple and Meta, to basically have a foot in the door with Fortune 500, possibly to say, hey, you're 80,000 employees, no more laptops, get rid of your laptops, no more updates on hardware and computers and all this stuff that you have to buy. Buy everybody a pair of these goggles.
it sounds terrifying, but yeah, I've heard that talked about.
That's wild.
Not soon. Obviously, that's, many iterations of it. But to your point, iPhone, we're on 15 now.
Yeah.
So
So Microsoft has got to be close on developing something.
yeah.
You'd
And then you
think.
have AI built into all of it so that it can
Wow.
predict your movements and all that kind of stuff. So yeah. We'll see where that kind of takes Apple moving forward. That, only time will tell. But anything else, buddy?
I think that's it.
Let's
I think
call
we
it.
covered it all. I mean, I guess just one last point on that, on the whole metaverse or all this, whatever you want to call it, immersive VR. I just think
Yeah.
it's one of those stories of the big companies keep winning.
They're staying ahead of the curve.
Unless and you could definitely have this, right? The DOJ could come in and regulate and break them up and all that stuff, and change their business models up a little bit. But without that, I don't see how these companies start losing. So
No.
I think that's what's going to, if there's going to be some volatility with these things, it's going to be antitrust. It's going to be lawsuits. You're seeing it in the EU, right? They're trying to basically prevent these companies from doing business. And, that's really, it's basically their game to lose at this point. And
Mm-hmm.
if they keep, they're going to have to walk a tightrope of let's not upset the regulators, but also keep the shareholders happy. The worst case scenario to me is they come in and break these companies up, which I remember we've been talking about this for 5, 6, 7 years now. I was at conferences 6, 7 years ago that were saying, oh, the Mag 7 are going to get broken up. you know,
Yeah.
and it still hasn't happened. But the sum of those pieces on their own could be more valuable than what these companies trade at today. YouTube getting spun off, you know, so what are the estimates?
Would
$400
be-
billion
Yeah,
on its own.
it would be one of the top companies as well.
It'd be
So-
it'd be a top 20 company or something like that.
Yeah.
So, you know, I think that's really probably where we're headed. But I don't think it's a reason to panic. I think it's one of those things like you saw Standard Oil, right? Back in the day, going
Got
way
broken
back.
up into all the majors.
All the majors, right? Exxon, Chevron, I'm pretty sure Marathon, did Conoco?
Amoco.
Yeah, did Conoco come from? I think so.
I'm not entirely sure.
So, Esso, right?
Yeah.
All these different oil companies. If you add them up today, they're way more valuable than Standard Oil ever would have been
Yeah.
on its own. So,
Yeah, time will tell with those. Well, remember, folks, if you like the show, be sure that you subscribe, share it with your friends. You can watch it on YouTube or listen to it on Spotify and Apple, same place you get the Nick Stenger Show. And if you'd like to learn more about Stenger Family Office, be sure to give us a call, 630-912-8431. You can start a relationship with us for just $1,000 starter account, $10 in fees a year. We appreciate you listening, and we'll catch you next week.
and before we go, the event's coming up.
Yes. 2 events in April. Dinner at Gibson's in Oak Brook and
April
a
17th.
April 17th, and then a dinner the following week on the 24th
Yep.
in Houston at remind me where it's at. True Lux.
In the Woodlands.
Yes.
But don't forget, April 17th, Sam and I are filming a live podcast in front of our audience, which is all of you,
with Jeremy Schwartz.
with Jeremy Schwartz, our first guest that we're going to have on Bullish, live podcast, Gibson's, April 17th. Don't miss it. It's going to be a blast. We've never done it before. Probably going to be one of the best events we've ever done.
Yeah, it's going to be a lot of fun.
So-
Looking forward to that. Thank you.